Hello, friends. Similar to the previous week, the market once again surprised everyone with a huge downside gap on last Monday. It seemed as we were completely decoupled with the global pairs, as the week opening had nothing to do with the global cues. Since we are battling with the mounting concerns with COVID-19 cases in our country, markets are having a knee-jerk reaction to this. In the initial trade, the selling extended to challenge the 14,200 mark. Fortunately, market saw some buying interest at lower levels as we did not spend much time below this key support. Similar sort of resilience was being witnessed throughout the remaining part of the week to trim some portion of losses. Markets are completely clueless which way to move in the near term. At higher levels, we are facing some pressure as the battle continues with respect to pandemic. And on the lower side, bulls are clearly not willing to give up. Hence, it has become very difficult to take any kind of directional call on the market. As far as our recent stance is concerned, we have been cautious on the market, and despite Nifty still holding on to the key support zone of 14,200, 14,150, we continue to advocate caution till that time some important levels are not surpassed. On Nifty, the immediate resistance can be seen around the 14,575, 14,650, where a sustainable move beyond 460 would negate the possibility of further correction to resume the upward trajectory. On the flip side, all eyes on 14,200, 14,150, and the more it gets challenged, the higher it creates the possibility of breaching it. Below this, Nifty opens up the downside for 1400, 13,700 levels. Ideally, the way market is attracting buying interest at the support zone, we should have considered this as a accumulation. But there are a couple of observations that are holding us back, and they are: firstly, the banking index is slipped below its rock solid support of 32,400, and the time till it does not claim 32,400, 33,000 convincingly, it is likely to be the major dragger. Secondly, importantly, the overall position of the Nifty Midcap index is completely overlooked by the market participants in general. Last week, we had highlighted about the breakdown from head and shoulder pattern in the index and the weekly chart to confirm a lower top, lower bottom for the first time in the entire marathon rally which started last April. All these factors do not bode well for the bulls, and hence, till the time we do not see the negation of the unfavorable developments, one should continue to remain light on long positions. Thank you.